Talks, I'm Cathy Yang, your intel in the Philippine markets and the economy. In the headlines, Philippine stocks swooned to their lowest in 3 years on Monday. On top, third quarter GDP may turn out far lower than forecast. For the local view, Dino Aquino of Security Bank Trust and Asset Management joins us live. And from the outside looking in, Yuben Paracueles, Chief ASEAN Economist at Nomura, joins us from Singapore. Flights and class cancellations across the country as Typhoon Tino hits land. Wind signal number 4 is up in several areas in the Visayas. And in the inaugural Philippine edition, Gallery by Chele earns the Michelin Green Star for its sustainable and mindful gastronomy. For our People Profit Planet segment, Chef Chele Gonzalez joins us live. Philippine Stock Exchange Index begins trading today at the 5,800 level after closing 1.17% lower on Monday, taking the index to its lowest in 3 years. We caught the market on open drop right here, as you can see on this chart, on this program 24 hours ago, a 2.7% dip right at the get-go in the first 15 to 20 minutes of trading to 58.01. Now, the intense selling pressure wasn't quite done yet then, as the index fell some more to an intraday low of 57.61, right about here, to fresh 3-year lows, and also among the lowest in more than 5 years, according to RCBC's Mike Ricofort. If we go further back to a 10-year period, among the global benchmarks tracked by Bloomberg, the PSEI checks out as the world's worst performer, coming from here all the way here. That's a 20% drop, tumbling 20% in 10 years, lagging behind regional and global peers. Our first guest says the word is market drop on talk that the Philippines' third quarter GDP out this Friday would come in sub 5%. Dino Aquino is Vice President Head of Fixed Income Trading, Security Bank Trust and Asset Management, and joins us now. Good seeing you again, Dino. Welcome back to the program.
Good morning, Cathy. It's down trading, so I hope the stock market won't down for today.
We can only hope. But what exactly went around in the markets that triggered that 2.7% drop on the open last 24 hours ago?
There were rumors that the GDP could print below 5%. I'm not particularly sure where that rumor came from, but generally, if you look at the trajectory of the GDP, it's definitely tilted on the downside given the lack of growth drivers.
And it's foreign-led selling that's triggered the market on open drop. Is that correct?
Yes, that's correct. That's correct. But our house view is still at 5.3. I just spoke to Jello this morning, so he's still expecting, hopefully, a print of 5.3%.
Okay, well, let's take a look at the revised projections because there were a couple that have already hit sub 5%. If we could just pull up that graph, Security Bank coming in at 5.3%, but there are far lower others sub 5%. Looking at Nomura Singapore, they're at 4.3%.
Yeah, your next guest, I saw 4.3.
Yeah.
4.3 figure, right?
There you are. And we put in yellow font Security Bank there, a little bit more optimistic than the rest, but what's the worst case based on what justifications would you have it if you were to put it on a worst case scenario?
I think if you look at it in perspective, anything a print that has a 4% handle is definitely bad for sentiment overall. It's fear-driven. The sell-off yesterday was definitely fear-driven. So if it does print below 5%, then those fears are confirmed. So I think that's a thing that we want to avoid.
Okay, let's take a look at the peso because that's held up fine even as stocks fell. Peso at the close on Monday even slightly appreciated. We've still got to look at whether that's open.
Stronger today.
In fact, it's stronger today at 58.70, coming all the way from 58.79. What is the market putting that down to, that resilience, despite the drop in stocks?
I think it's overdone. It's overbought the past few days, given the height of the fears with regards to the corruption issues and the GDP fears. Even the peso bonds is quite oversold, and it's actually resilient. It's been performing today. It's been opening stronger than yesterday. So I guess there's a lot of markets. It's really overdone given the height of the sentiment in terms of the fear on the corruption, fear on the GDP and the growth, and of course, inflation is also coming up on Thursday.
Okay.
So, yeah, that's another thing that we're looking
There's
into.
a whole lot of economic data still, but how are the bonds doing?
Yeah,
Because in risk-off environment, are they doing pretty well? I'm seeing sub 6% right now.
yeah, it's still performing. Yeah, but still, it's still generating stable returns. But compared to previous easing cycles, as a bond trader, it's still a disappointing market. If you just compare it to previous easing cycles in 2019 and 2020, we've seen double-digit returns on an easing cycle such as we are experiencing right now. But now we're all funds are just generally generating around 3 to 5% return. So it's not even half of what we've seen in the pandemic, and not even a quarter of what we've seen in 2019. So as a bond trader, the market is still underperforming. Well, we can't complain with gains, but at the end of the day,
Exactly.
it,
Can't
yeah,
complain.
it's still
Beggars
you
can't be
can't complain with
choosers.
some gains. Yeah,
All right, but
can't
we'll take
complain
what
with
we
some
can get.
gains. So yeah, but I hope we're hoping for a better finish, and I believe that we can finish strong to end the year in 2025.
All right. Well, thank you so much, Dino Aquino, Security Bank Trust and Asset Management. And let's head on over now to Singapore for the view from the outside looking in. Yuben Paracueles, Chief ASEAN Economist at Nomura, joins us live. So good seeing you again, Yuben. Welcome back to the program.
Yeah, hey, Cathy, morning. Thanks for having me again.
Sure. You've got your third quarter GDP forecast at the top of the stack there, 4.3%, but that's the lowest by far among the analysts and economists monitoring the Philippine economy, both overseas and local combined. So how'd you get to such a bad scenario?
Yeah, we've been doing a lot of work in terms of trying to look at some scenarios on the implications from the ongoing corruption controversy. And then, of course, we were tracking a lot of the data, particularly on the fiscal side, to give us a good handle in terms of where we're headed. And the September fiscal numbers is really what sort of prompted us to make that revision, because we saw if you take out interest expenses and debt service payments, expenditures actually fell double digits, so minus 10% from minus 3 in the previous one. So that's how large the impact has been, and that's how quick it has been. So if you remember, it was only in late July in the State of the Nation address of the president that this scandal first broke, and 2 months down the road, we've had spending being curtailed quite severely, and that's just the start. So I think for the next few months, if you look at past episodes, of course, this one is a much bigger scale. You'd probably see a bigger drag on growth as we go through the rest of the year.
Even more interesting, Yuben, because I remember, and we were talking last February, you were one of the more optimistic 9 months ago, because back in February, you had tipped for 6% growth this year. And now you're tracking us in 3 different scenarios. As you can see on the screen, there's the mild, the bad, and severe. Take us through that and how you track the economy's progress and then the progression into its current state.
Yeah, so as I said before, I think if you look at the data, we are now tracking in a bad scenario when it comes to fiscal spending. This is kind of similar to the 2011 episode of the anti-corruption drive of former President Aquino. The mild scenario that I have is 2023, when we have a little bit of a underspending at the start of the year by the government, but that was kind of corrected quickly, so it was a little bit mild. The severe scenario that I have is if you combine the bad scenario plus the possibility that the budget might not be enacted on time, which means we get into a 2019 scenario when it was delayed for 5 months, and we know we've seen what happened then when it comes to the growth impact. So I don't think we're there yet. So we're watching that very closely in terms of the budget deliberations, but it seems clear at this stage that the bad scenario is playing out a little bit, again, given how much the fiscal spending has dropped in September.
Well, let's take a look at these charts because very interestingly, you made a mention of fiscal expenditures, excluding debt servicing. We see a drop there. Taking a look at the next chart, very interestingly that you also took concern on public infrastructure spending because the DPWH is the key government agency involved here. And taking a look at the next chart, we're also looking at the non-interest expenditure growth, and this pretty much convinced you that it could get to a severe scenario. But when do you cross the line, considering that there's still the monetary policy stance that we will take and to consideration by the before the end of the year, and which might help prop GDP growth?
Yeah, definitely. BSP's easing, which I think will continue, will have some impact. But as you know, monetary policy works with a lag. So the implications from the rate cuts that they've done so far might take some time before it feeds through to the economy. By contrast, what we call some fiscal tightening, because the government expenditures are declining, it's very quick, as I said before. It's already happening in September, and as you saw in the chart there, it is tracking closer to what we've assigned as a bad scenario. So, yeah, the bad news is this is just the beginning, and again, if you go by the past episodes, what you see in a bad scenario like this is it could low government spending could linger for a while, maybe 3 or 4 months down the road, and it could get worse or it could get extended if we see a delay in the budget enactment.
What sort of a risk, though, do you think the peso might have in constraining the Bangko Sentral from cutting the way it probably would or should have before the peso fell to near 60?
Yeah, I think there's definitely some pressure on the currency. I think what's happening now is really more from a growth differential angle. So in other words, when the domestic economy is not doing well, whereas the rest of the world is looking like they're a bit more resilient, then obviously you'll get some capital outflows, particularly in equity markets, as discussed previously. So that's what we're seeing. So there is some pressure. When it comes to the BSP, we've already been hearing a lot of statements from officials that they're not really targeting certain levels, or they're not looking to intervene more actively. So they're letting market forces decide. So I think it will be a secondary consideration at this stage when they think about cutting rates. And they have FX reserves. They can intervene when the moves are too sharp. So again, that leaves us with them focusing on trying to support the domestic economy, especially when inflation is so well behaved. So at this stage, I have 50 basis points of additional cuts by BSP, but I'm not ruling out that they deliver more into 2026, especially if we have a severe scenario playing out.
Got that. Well, thank you so much for your insights, Yuben Paracuellas, for taking us all through that of Nomura in Singapore. And the Department of Economy, Planning and Development is less optimistic that the Philippines can hit its GDP target for the third quarter. DepDev Secretary Arsenio Balisacan says the third quarter has been a challenging period due to the flood control controversy and the series of typhoons that hit the country. Growth has also been dampened by the U.S. tariffs. Balisacan says while third quarter GDP may not turn out as expected, these setbacks are temporary. A Business World poll of 18 economists is forecasting the economy to have cooled in the third quarter, with the median figure standing at 5.3%. If realized, this will be slower than the 5.5% expansion in the second quarter, but a tad faster than the 5.2% in the third quarter of last year. The GDP figures are out this Friday. In other news, life-threatening conditions continue over Negros Island region as Typhoon Tino approaches Panay Island. The eye of Typhoon Tino was located in the vicinity of Sagay City, Negros Occidental. It's packing maximum winds of 150 kilometers per hour and gusts of up to 205, moving west-northwest at 25 kilometers per hour. Tino, which is the country's 20th cyclone this year, is threatening the Visayas, parts of Mindanao, and southern Luzon with torrential rains and destructive winds. It made its first landfall in southern Leyte on Tuesday midnight. Wind signal numbers 3 and 4 are now up over several areas in the Visayas region. while signals 1 and 2 are in effect in other areas of the Visayas, Mindanao, and southern Luzon. Several airlines have canceled flights for passenger safety. Dozens of flights are affected. They are now flashed on your screens. Local governments have also suspended classes and work in several areas, including provinces in Mimaropa, Bicol, and the Visayas regions, such as Iloilo, Cebu, and Leyte, as Tino continues to bring heavy rain and strong winds. Stay tuned on One News for the latest on Typhoon Tino. You're watching Money Talks. Coming up, we check in on the U.S. and local markets here in the Philippines as the peso recovers further. Plus, we speak to Chef Chele Gonzalez of Gallery by Chele on his Michelin Green Star. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. In the inaugural Philippine edition of the Michelin Guide, Gallery by Chele earned 2 recognitions, a 1 Michelin star and the Green Michelin Star. Chef Chele Gonzalez's restaurant earned the Michelin Green Star for its strong farm-to-table ethos and commitment to biodiversity, waste reduction, and community sourcing. These go on top of the 1 Michelin star Chef Chele had earned in his Cavite restaurant, Asador Alfonso. With us now for more for our segment People, Profit, Planet, Chef Chele Gonzalez. Congratulations, Chef Chele, and welcome to the program. All right, so what has it been like since the Michelin recognition, Chef?
It has been a bomb. We have been featured in Asia 50 Best several years, also in Tatler in Best Chef Award. But Michelin obviously is the most international accolade. It has been really, I still cannot answer all of my message and social media recognition, no? So it has been very, very intense. I'm very, very happy for everybody in the industry. It has been very, very distinguished among many different restaurants around the country. So it's amazing.
It is indeed, and just honing in on your Michelin Green Star recognition, that makes it really unique. What are the core sustainable practices that you've integrated at Gallery by Chele? Make us understand and how you got to bring some mindful gastronomy into your cuisine.
So Gallery by Chele opened its doors in August 2013, and the first thing that we did is really give value to the local ingredients. Me as a foreign, and I think every chef should be curious, I land in a new country, everything it was new, from the street food, from a simple or humble, calamansi, that is one of my favorite ingredients. So I felt that to have a high level of fine dining restaurant, you don't need to import ingredients. At that time, actually, it was very difficult, and I lost a lot of customers because my focus was really to give a lot of, value to whatever it was surrounded. So we started to travel all around the country, from Mindanao to Ilocos to every single region of the beautiful Philippines, and start to give value from, daily local ingredients to the Filipino herbs. So our garden is in the middle of the city. It's a urban garden, and everything that we grow there is either Filipino medicinal herbs like gotukolas, pansitan, to Southeast Asia in general, because some of the herbs that we have here is also a part of Southeast Asian, herbs. So most of the things that we try to do is really highlight, the local produce. We work with farmers, we work with suppliers that, we try to get sustainable certification. So most of our dishes, or either come from the market and we follow strict guidelines in the size, if they are healthy or not in the ecosystem, and also, with others that they give us a certification that they are sustainable catch, by hook in a different areas where, the communities catch in the regulations of how it means to be healthy for the ocean.
It's amazing that you've traveled across the country and you've picked calamansi as your favorite ingredient, a local ingredient that is. You did say that the chef has to be curious and also collaborative. You have done a collaboration with the International Rice Research Institute, or IRI, to preserve heirloom rice varieties, and that's pretty unique. How do initiatives like this contribute to biodiversity and the cultural heritage in Philippine cuisine?
Well, again, it's a natural approach. I had to say that when we started at the 13 years ago, and we did something that I feel proud about, because we said that we redefine luxury through local ingredients, and I think that is an achievement that it blends, the philosophy of what we do today. Maybe right now we do it in a more fine dining format, where but I think this is spread, and I think what Michelin is recognized around the country is that it's a Filipino gastronomy revolution, and it's spreading around the world. And you can see the new generations, how proud are they to use Filipino ingredients and Filipino culinary gastronomy. And maybe we were one of the initiators on this, but right now it's really spreading. And we have Lina Man, who got also a young chef and also one Michelin star. So I think we need to see the big picture of what is happening, and how much changed in the last 13 years, the landscape, and how much is now, Filipino chefs proud to use Filipino ingredients, as it had.
That big picture is also changing because of the diners and how you're educating the diners about sustainability through your tasting menus and the whole dining experience. So what would you bring forth then to the Filipino customer, or to the customer who comes from overseas, who've heard of your restaurants and want to try the experience of what mindful gastronomy means and why it should matter?
Well, for me, it was a natural progression. I mean, it was not, putting the word sustainability. I used to come from restaurants who, we just work with farmers and people who is around us. So for me, it was just part of, I think a chef had the opportunity to bring values through the cooking that you do. And I think Gallery is all about that. It's a restaurant who is built for almost 14 years. And we take the opportunity to really not only cook delicious dishes, but to have a meaning on what we do. And it's something that we have been doing again for many, many years. As you mentioned, we have been working with IRI, but we have been working with a lot of indigenous communities. One of the projects that we have pre-pandemic that we couldn't finalize, but right now I think this Green Star gives a lot of motivation to keep working hard. It was to work with some indigenous communities to also sometimes document that, and then or traditional recipes, and keep it that they don't get lost in the modern world, because even sometimes this is happening. People start to use all of these chemicals that you can buy in the supermarket to make a sour soup, where we lose sometimes the heritage. So something that we do aside of use local ingredients is really also to look in the heritage and to see and give value to things that sometimes are lost. So I think it's many different ways how you can give value to a better and more responsible way of cooking, and give value to things that sometimes in these days, with the monoculture and many other things, are getting lost.
Chef, what does value mean to you then for the customer who want to try your cuisine? Is it affordable? Is it reasonably priced? And for the farmers and communities you work with, are their margins any higher?
Well, I think, the Philippines and our restaurant probably, for what we offer, is one of the cheapest countries in the world. If you go to any other countries in Southeast Asia or in Europe, testing menu of what we are offering is probably double. So the only way, at these days, to really also keep, the prices up, affordable, is really, to use local ingredients where, the fluctuation of the prices are a little bit less. I think, yes, it's difficult. In Gallery by Chile, we are more than 55 people working there. So imagine, we are sustaining more than 55 families. So I think it's a community effort to really, highlight all of this. Prices cannot be less. Actually, we are struggling to really try to don't put the prices too high, and to maintain 55 people, 3 sommeliers, beverage program, 4 R&D chefs who are different roles, to highlight all of these sustainable practices. So it's a lot of work behind of what you put in the plate, and we try to keep it as low as we can, to be affordable. But believe me, it's not easy.
It's not easy, but you've got Kalamati to back you up. Thank you so much for the insights. I much appreciate it. Congratulations, Chef Chele Gonzalez, joining us. Let's take a look at the markets and see whether U.S. stocks have finished a mixed bag, and they did on the first trading day of November. Tech stocks boosted by Amazon's $38 billion deal with OpenAI for access to hundreds of thousands of NVIDIA's GPUs. The Nasdaq up yesterday by nearly 0.5%, and the S&P 500 rose by 0.1%. The Dow tumbled by about 0.5%. The benchmark 10-year Treasury yields have ticked up to 4.106%. Gold prices have jumped to $4,000 per ounce. U.S. futures are slightly down in after-hours trading, with the Nasdaq falling by 0.4%, S&P 0.25%, and the Dow by 0.1%. And the Asian markets have broken ranks from Wall Street's rally, trading mixed this Tuesday. As you can see, the mixed arrows there. Japan's Nikkei 225 up less than 0.1%. The Kospi tumbling 0.8%, and Australia's ASX 200 slides by 0.5%. And a look at our own markets and see whether the PSEI has opened any higher this Tuesday, and it has by 0.33%. 5,849. The local bourse sank yesterday, Monday, to its lowest in 3 years, so it's a recovery as we speak. It slid by 1.7% as investors traded cautiously ahead of major economic releases, including inflation out tomorrow, Wednesday, and GDP on Friday, said Unicapital Securities. Structural challenges hounding what Bloomberg describes as the world's worst performing stock market. These challenges include limited market diversity, sluggish turnover, and scarce new listings. Add to that the flood control scandal that has further eroded investor confidence. To shore up the bourse, the SEC is pushing for state-owned firms to go public, which, coupled with continued rate cuts and growth prospects, could attract investors. While the PSE hopes to educate more retail investors and ease listing requirements to revive interest. Let's take a look at the Philippine peso. All around for the PSEI and the Philippine peso ahead of the inflation report out tomorrow, which will break here on Money Talks. Catch us again at 9:30 a.m. tomorrow. Kapatid, we are one news, all sides, all the time. Have a great day ahead.